Hey, welcome to The Explainer. Today we're going to break down the stock market, and we're going to do it in just about 5 minutes. Let's get into it.
So let me ask you something. Have you ever been using a product, I don't know, your phone, your favorite coffee, and thought, man, I wish I could own a piece of this company? Well, guess what? You actually can. And today we're going to unpack exactly how that's possible.
Okay, so to get to the bottom of that, we first have to talk about the place where all the magic happens. And that is, of course, the stock exchange.
All right, so at its heart, a stock exchange is basically just a huge, super organized digital market. And you can forget those old movies with traders shouting and throwing paper everywhere. Nope. Today, it's all a massive computerized system where financial assets are bought and sold in the blink of an eye.
Okay, but this marketplace also goes by another name. And you know what? Understanding this name is really the key to getting how the whole thing works. It's called the secondary market.
And this is where that name makes perfect sense. On one side, you have the primary market. Now, think of this as where a company creates a brand new share and sells it for the very first time. That's the famous IPO, or initial public offering. But where we usually trade, that's the secondary market. This is where investors, people like you and me, trade those shares that already exist among ourselves. So, the key takeaway? The exchange itself doesn't create new stuff. It's just the playground for us to trade.
So, what's the single most important job of the exchange? Well, it's providing something called liquidity. And don't let the fancy word fool you, it's a really simple idea. It just means you can easily and quickly turn your shares back into cold, hard cash whenever you want. I mean, without that, you'd be stuck holding on to something you couldn't sell, right? That's a huge risk. The exchange fixes that by connecting you to millions of buyers and sellers instantly.
Okay, so if the exchange is this giant market, what's for sale? What's actually on the shelves? What are we all buying and selling here?
Right. So the official term for everything you can trade on the exchange is securities. And all a security really is a legal contract that has financial value, and it gives the person who owns it certain rights.
And wow, there is a whole variety of these things. The most common ones are stocks, that's ownership in a company. Then you've got bonds, which are basically just you loaning money to a company or even the government, and they pay you back with interest. And then there's more complex stuff like options. But for today, we're going to focus on the main event, the big star, stocks.
All right, let's zoom in on the real superstar of the market, the one that gets all the headlines. We're talking about D-stock.
And this is the big idea right here. When you buy a stock, you're not just buying some code on a screen. You are literally buying a tiny piece of that actual business. You become a part owner, a partner in whatever that company does next.
And it's such a simple but really powerful concept. The more of these shares you buy, the bigger your slice of the company pie gets. Your ownership stake just keeps growing with every single share you add. So what do you actually get for being an owner? Well, it boils down to 3 fundamental rights. First, you get legal ownership. That means you own a tiny piece of everything, the factories, the patents, the whole shebang. Second, you get voting power. Yep, you get a say in big decisions, like who sits on the board of directors. And third, and this is a big one, you might get a share of the profits. If the company is doing well, they might decide to pay out some of those earnings directly to you. We call that a dividend.
Okay, let's double-click on that last point about getting paid, because there's a really important difference between a dividend you get from a stock and the interest you earn from a bond.
So check this out. With a bond, the company is legally required to pay you interest. It's a deal. It's a fixed payment they have to make. But with a stock, that dividend payment, well, that's a choice. The company's bosses decide if they're going to share the profits or not. So yeah, that makes stocks riskier for sure. But it also gives them a much higher potential reward. I mean, think about it. If the company just explodes in growth, those dividends could become way, way bigger than any fixed interest payment.
All right, so the theory is all well and good, right? But how do you actually do it? How does a regular person like you or me get in on the action? Well, the first thing you need to know is you can't just, call up the stock exchange and say, hey, I'd like to buy 1 share of that company. It doesn't work like that. You have to go through an official middleman, and they're called a stock exchange member.
So who are these members? Well, they're exactly who you'd think they are, major financial institutions. We're talking about the big banks and also those specialized brokerage firms you see ads for. These guys are your official gateway to the market.
And honestly, the process to get started is pretty simple. Step 1, you pick a member, a bank or a broker you like. Step 2, you open up a special securities account with them. And then, Step 3, you use their website or app to start placing your buy and sell orders. It's really that easy to get access.
And there you have it. That is the stock market in a nutshell. We've talked about what it is, what's being traded, and how you can get your foot in the door. So I'll leave you with this final thought. Now that you know buying a stock doesn't just make you an investor, it makes you a partner in the business. Which company would you want to be partners with?